today's PA a bit and talk about how I viewed the market. So when I got to the charts, we were around here somewhere. I think I might have shown up 15 minutes later. As always, I start my observation on the daily. And what we can note here on the daily is so when I showed up to the charts, this candle had been full and it was sitting right at the 4-hour POI. And sitting in this demand or supply, I should say, we hadn't closed yet, so we had not been bullish at that time yet. So we just became bullish with this candle close above this. This is actually my second try at this recording. I just talked and for a while, and I thought I was recording last time. Finished the video and realized I wasn't recording, so I had to remake this, but that's all right. Um, so going from the daily to the 4-hour, we can obviously see 4 hours bullish. Um, and the way I look at it, as we tapped into a 4-hour supply, and I was kind of thinking we'll probably tap into one of these zones, and maybe we'll go in for a deeper drive before we see a retracement. And to me, as long as the slow stays intact and no candle body close happens, we stay bullish. Um, and then we'll talk about what happened, what actually happened. I had a bit of a wrong bias today, but everything worked out just fine because of management. Let's go to the 1 minute and we can talk about how price action developed. So we're inside this 4-hour supply here. Um, right here, we get a demand failure. Bearish momentum is shown. We had no interaction between buyers and sellers here. Um, I'm never interested in entering on the first demand break as we are very bullish. This would be very counter trend. So we're always looking for that second demand to fail before we go counter trend. And obviously, counter trend, we manage a little more aggressively. So this to me would be the reaction point because we've seen the best reaction from this. You could argue and say this was a reaction point, but I like this one better because it was a better reaction. Again, I'm not interested in selling off this. I want to see demand fail. I want to know that supply is in control. So we create a reaction point. The reaction point actually gets taken out right here. So this to me becomes an important zone. But ultimately, the failure of the demand comes from here. And now we can assume that one of our 2 points should get hit. I put an order on both. I don't have a problem losing one because we know we should expect some sort of retracement if two demands fail. And if you're wrong, you're wrong. That's fine. I do, I think I had like 1.3 or 1.4 today, somewhere in there. Anyway, to myself, I'll automatically target the second demand. I'll take heavy partials at the first one to make sure I'm up on the day. I leave my stops open most of the time unless price starts messing around for too long. Then I'll move to break even and protect my capital. But generally at 1 to 4 hour, I sell 20% of my trade or 20% of my lot size to cover risk. And in this case, that's under 6 pips, so we can hit that pretty quick. And again, I'll leave my stops open usually. Unless price does something I don't like, then I will usually go to break even. So in this case, we had TP1. Price kind of screws around here. We're now a 15-minute supply print. That's this pink zone here. And we can actually see some bearish aggression to the downside. And yeah, you could have totally entered here depending how you trade. To me, that's as long as this holds, you can definitely re-enter. So that's totally up to you. It depends on your risk management. Again, this is very counter trend, but that was definitely a reasonable scale in there. TP2 hit. So we could say a supply printed. And we could say this is our last supply that put in this low and took out these lows. And as of right now, what we could say is demand is holding. So now if we just go to the 15-minute side of things here, We'll just catch this up, and is it, oh, might have fast forwarded a bit. No, never mind. Whoops. Little trigger happy on that one. Okay, that's fine. So we'll go back to this one here. We got a reaction point here. A reaction point gets taken out. Demand prints. To me, this is the demand that I'd want to take a trade from. You could always argue that this is an area to get into. What I don't like about this area is all the inducement or liquidity has been swept here. There's really nothing here other than this little candle wick and what's underneath here. And I like to see a little more than that usually. So we print a proper inducement here, and to me this demand should hold. So we get a reaction off the 15-minute supply. So as of right now, we can note that supply is in control. And even though we are bullish, so to me, we're bullish as long as we don't get a candle body close below that. And I don't believe we did. And yeah, it was just wicks. That's was kind of screwing up my bias today, but it was just wicks. So for myself, I got the bullish bias on. Um, Supply is in control right now, even though we are bullish. So this is where we have to be smart about management. Even though we're with trend, supply is in control. So we came in, we tapped. Again, we'll enter here. Now I took the majority of my position off when we ran this high. I wasn't interested in holding too much past that. Reason being is supply's in control. I would have no problems holding the trade longer if demand's in control, but supply is maintaining control. But you never know, right? So you leave a little runner on. And this is why I partial out and leave my stops open. Had you gone break even, in most cases, that would take you out. Now, if price came up here a little ways and it started coming back down, I would probably go break even on it. I don't really like seeing price come down too much at this point. So, just to, to be safe and protect our capital. So, yeah, we're fine. We did hit TP here. Again, I closed most of my trade here. Something to note here, and I kind of missed this today, but we have we had a let's go on the full screen. We had this 15 high, which was taken by this low. This has been mitigated. This has been mitigated. Um, this has kind of been mitigated by this. This has been mitigated. That's mitigated that, I should say. This really didn't do a whole lot, but you could say everything in here is kind of mitigated. So if we look at the realistic thing, we have this wick as a POI, and you could say this area is a POI. However, if you look, our wick here has tapped into this and mitigated it. Yes, we can tap into it a few times. To me, I like to see all of this as inducement for this. And if we just kind of pay attention to PA, again, I hit my two trades off. I didn't catch any of these beautiful shorts, but I know some guys did, and they basically tapped into the area that caused higher prices. And to me, this wick initiated this whole leg. There's always shit in wicks. A wick is a it's a good indication that the BFIs are present. They're the only ones that have enough capital and lot size to do that to a candle, meaning they had enough capital to push this candle down like this. And usually anytime, even like right here, if you look, we swept all the liquidity to the left, very aggressive. That's a BFI footprint. That's a BFI footprint. Anytime you're seeing wicks and price aggressively moves away from it, to me, that's a BFI footprint. Now, when I was talking about picking POIs, one of the things I like to see when price leaves is I like to see a sweep. So if you pay attention, this candle came lower than this one. The liquidity was swept. No new high was really made here, but Then liquidity was swept one more time, and you actually did kind of make a new high. No candle body close, but these points to me where liquidity swept is they have to me they hold more value. So we always like to see liquidity swept before price moves away. If liquidity hasn't been swept and we got a form of equal highs or equal lows sitting somewhere, there's a good chance that'll get tapped into before price moves away. So just something to be aware of. We're always looking at how an order block prints, how a high or a low is formed. Like if we look at this low right here, price aggressively moved away. This low formed correctly. To me, that should stay intact for a bit. And I always look at these things. Whereas if price kind of screwed around here forever and ever and ever and ever, to me, that's not a low that formed correctly. Just like this high formed correctly, we left price really quick. Bearish engulfing candle down. I like to see that. But yeah, in a nutshell, that was kind of today's recaps. Yeah, I didn't catch any of the downside stuff, unfortunately, but I did pretty good today. What is that? 13R and 7R. Yeah, there's nothing wrong with that. And that's all it is. Like, you don't have to be right. You just have to be right enough and manage correctly to lock your profits in. And to me, it all comes down to management. If you manage right, you should be able to lose quite a few trades without losing any capital. And that's what ultimately makes you profitable is correct management for when the market beats you. Anyways, guys, I hope this video makes some sense. And yeah, have a good day.